Hi, it's Terry here. The origin of the insurance industry and how it evolved. Insurance is nothing but a system of spreading the risk of one onto the shoulders of many. Whilst it becomes somewhat impossible for a man to bear by himself 100% loss to his own property or interest arising out of any unforeseen contingency, insurance is a method or process which distributes the burden of the loss on a number of persons within the group formed for this particular purpose. Origin of insurance. Although not in the present-day form of insurance, the concept of such a philosophy of grouping together or risk-sharing developed in very ancient times. We can probably go back to the 4th century, which witnessed the practice of bottom-rate bonds and respondentia bonds in maritime trade. If at a time of distress in mid-ocean, the master of the vessel used to be in need of funds/money for the completion of the journey, but could not manage the same at an intermediary port either on his own account or on the account of the owner of the vessel, he, master, was empowered to raise such fund by pledging the vessel. Such a system was known as bottom-rate bond, as the loan was used to be given by signing a bond. The term of the agreement was that the loan was required to be repaid only if the ship reached destination safe and sound. In case of a total loss of the ship, nothing was required to be repaid. It was quite obvious, therefore, that the creditors used to charge a premium, in addition to interest, to protect themselves against the possibility of total losses when they lose the principal amount. Similar loans could also be raised on the pledge of cargo, and this was used to be done on respondentia bonds. The terms of repayment were exactly the same. The practice has been abandoned since the 19th century because of tremendous advancement in a communication system. Another practice that is still in existence is known as general average, which has in itself the element of sharing the loss of one by all. It is a very old custom and can be traced back to 916 B.C. during the time of Rhodians. In a maritime adventure, it is probable that the ship along with cargo and other interests is in great distress in mid-ocean, and it may be required of the master of the vessel to take a bold decision on the spot aiming at the safety of the venture. Such action may involve incurring expenditure or sacrifice, for example throwing overboard of the cargo to lighten the vessel. As this expenditure or sacrifice relates to some interest by which the rest of the interests are saved, it is quite natural that all interests involved, saved and lost, should contribute to this loss. This is known as general average, and it should be understood that an element of sharing the loss by many is involved in the system. Up until the 18th century, we also experience, amongst the merchant community, a system of sharing risks with each other. They used to form a group wherein one of the merchants, in a particular voyage, used to accept the risk against a premium from others whilst the others used to trade. On a different occasion, another from the group used to accept the risk whilst the rest used to trade, and so on. So at one time or the other each had to take the responsibility of risk-bearing, and the collection, premium, was such which could reasonably take care of a probable loss. As the group was indeed small and the professional expertise on risk management was rather very limited, the rate of premium used to be necessarily high. Here also it is necessary for the students to appreciate that even though this is not the present-day system of insurance as an isolated specialized entity, the concept of insurance, that is to say, a system of sharing or spreading risks, gradually developed because of need, which was ultimately replaced by the modern insurance approach. Considering that knowledge of historical development on any branch of study provides for the reader a piece of useful background information as to how that particular branch gradually developed as a separate entity, it has been felt that insofar as insurance is concerned, such knowledge is also indispensable for the students studying this branch. With this aim in view, a brief chronological historical development of the various branches of insurance is given below. History and development of marine insurance. Marine is the oldest form of insurance and came first on the list. This type of insurance probably began in northern Italy sometime during the 12th and 13th century, and gradually the concept was rather transferred to or taken over by the United Kingdom. During the 13th/14th century, the Italian merchants went to UK, and along with the merchandise carried with them the trading customs, including the concept of marine insurance. Marine insurance as such was not being practiced as a separate specialized entity during that time, since it was the merchants who used to transact the marine insurance business side by side with their general trading activities. Gradually the Lombard Street of England, named after the merchants of Lombardy of Italy, started becoming the nerve center of marine insurance activities, as it was here where the merchants used to assemble for the purpose of trade and insurance protection. However, problems used to arise as there were no set rules or regulations for settling disputes arising out of marine policies, and it was the Lombard Street customs that used to influence the settlement of such disputes. practices were there to refer disputes to Admiralty Court, but it had the drawback of not having special knowledge of the law merchants or of Lombard Street customs. Subsequently in 1575 Chamber of Assurances was established for the registration of insurance policies, and the advantage it has had in it was that the disputes were minimum because such registration was the evidence of the contract and various terms and conditions under it. In 1601, the Court of Arbitration was established through enactment for settling disputes on marine policies. The Bubble Act, 1720 saw the granting of charter to two insurance companies, viz., Royal Exchange, and London Assurance, for transacting marine insurance business side by side with the individuals. The coffee houses of London have indeed played a very vital role in the development of trade and commerce of the UK. It is in such houses that the merchants and traders used to congregate for their business transactions. One such coffee house was opened by Edward Lloyd in 1680, where the merchants used to frequent their visits. Auctions of ships, insurance coverage, etc. used to take place here, and gradually it became a place of shipping intelligence. Since the later part of the 17th century and early 18th century, this coffee house virtually turned into the most famous Lloyd's, which can boast of being the strongest and soundest insurance organization all over the world. The monopolies granted to two insurance companies previously by the Bubble Act 1720 were subsequently repealed, and now numbers of insurance companies and individual insurers are operating as marine insurers in the UK. The present act regulating the marine insurance business is the Marine Insurance Act, 1906, and this act is followed in our country also. History and development of fire insurance. Fire insurance came second in the list of development. The insurers who had hitherto been doing marine were contemplating about starting the fire insurance business also. The Great Fire of London in 1666 practically demonstrated the necessity and urgency of fire insurance. About 7 insurance companies came forward to provide fire insurance protection. But due to the introduction of newer types of hazards arising out of the Industrial Revolution of the 19th century, and because of the increased demand for such type of insurance, some more companies had to come into the picture. The Toole Street Fire, 1861 had an influence on improving the business of fire insurance, as it demonstrated that classification of risk was necessary for the sound rating system. In 1868 the Fire Officers Committee, FOC, was formed, which has multifarious responsibilities like uniform rating, statistics, and various technical advice to member companies. Subsequently also developed various other bodies, such as Joint Fire Research Organization, salvage corporations, and more, who are directly and indirectly helping the fire insurance business on a sound scientific line.
Stay tuned for upcoming videos that will help you get informed with your current insurance needs. For a more personal and tailored approach for your particular insurance needs, you can visit us at 9220 Jane Road North, Lake Elmo, Minnesota 55042, Minnesota. Or call us at 612-418-2940. You can also schedule a Zoom call with us by sending a message to quinninsuranceagencymn@gmail.com. Stay safe and strong during these times.